Hey, what's up, everybody? How y'all doing? This is another episode of Black Box Beat. Got that word on the street. Hopefully, everyone is doing well. I'm Kang.
I'm Maria.
And I'm Hells. All right, let's get into some of this action here. Chat room chatter wise, I think the biggest thing that everybody's kind of look at, especially this week, are the earnings. We've had some big earnings so far with Google yesterday, Microsoft yesterday. Both put up nice numbers. Meta just reported and is throwing up massive candles to the upside, and the Nasdaq is blitzing here after hours. So we have some activity and some moves. I think the question of the day that I'll pose to each of you before I go on a little rampage tirade is going to be the question is this. Are these companies performing well in spite of economic, I don't want to say downturn, but if nothing, stagnation, let's call it that? Or was the bar lowered so much that they're beating these expectations like they're really nothing? Like, of course they will. What do you have, Kang?
I think it's a little bit of both, depending upon whatever company you look for. But I do think it's definitely like that segment from the '90s lowered expectations. I mean, if you set the bar low enough, right, it it's like everybody is coming in, better. But I would lean. I think it's just depending upon who you look at. But I definitely think the bar has been set low, and I'm really going to be looking forward to Apple. I think it holds the key, but we got to wait all the way till next Thursday.
I agree. I'm with Kang. I think that the bar has been set low, which is actually funny because when we talked about this last week, I was kind of under the impression, or the thought that I had was that all these companies are really going to have to come out and do even better. Like a mediocre beat wasn't going to cut it. But I think Kang's right. The expectations are lowered. Earnings are coming in okay. Are they phenomenal? No. Are they mind blowing? No. But are they good enough for a move? Yes.
And I think that's the point, Mario. It's like especially these three, right? We Microsoft, Meta, Google. We've seen them have nice little runs. Google likes to kick itself in the face whenever it gets an opportunity. Anytime they have a public display, they absolutely just kick themselves in the face. So let's kind of put them to the side because they can't do a press conference to save their lives. But let's focus on the other two. Um, these are two of the biggest companies in the world that have been able to survive in many, many environments. And we're walking into some uncertainty again. And it would appear that mega cap tech is the place where people want to put their money. I don't think there's any question, especially after the run. It's like you look at that run on Meta, and then you're thinking, okay, so Meta's going to have to annihilate the results to get a green candle. I don't know what the numbers are on the results, but they're pushing the entire market higher right now. And I think that's one of the things overall. I think expectations were low, but these guys are already beat down so substantially over the last year. Where are we going to go? Are we going to
Yep.
push? Where are we going to? Where's the actual move that makes sense? We keep on hearing about we're going to get recession. We keep on hearing everybody's going to kill us. We keep on hearing this and that. It's like none of that is coming to fruition so far. The data is holding strong, and I know, Kang, you're looking at that data right now. Tell me about some of the things you're looking at from a data standpoint. When we know we have GDP and jobs tomorrow, what else are you looking at?
So yeah, GDP initial jobless claims coming out tomorrow. I'm going to be looking at PCE, which comes out on Friday. That's the Fed's preferred method of inflation. And then we've got the Fed meeting next week. Now, kind of backpedaling a little bit to the ERs, I think it's interesting, as we've been talking about like these really good numbers that have been coming out and kind of putting those things into perspective, there are some things to kind of be concerned about. Like you have McDonald's, Procter and Gamble, Chipotle, I think even mentioned it. And there's a couple more, I think, oh, Coke and Pepsi. And they're talking about how at least for the moment, they've been able to raise prices and pass those along to the consumer. And the consumer at this point really hasn't started to kind of back away just yet. But, again, they're raising prices. At what point does that continue to factor into this? And I understand we're talking about a slice here, right? So a small slither of things. But to me, I would look at that and say, okay, at what point does that factor into that last 3.5% of inflation that is going to be sticky and hard to get rid of? Right. So at what point do these prices, these continued price increases factor through? and how does that contribute to the current inflationary
Right.
picture? I don't think it's a
Mhm.
matter of if we're going to get a recession, because the consumer is holding up strong right now. But at
Yeah,
what point do they
I'll
say,
let
okay,
Maria.
I've had enough, and kind of trade
Let's
down a
let
little bit,
Maria
and then
jump
they
on
start to
that
pull back?
on those points. You made some really great points. Maria, you have anything on that?
No, I agree completely. I think that's going to be really interesting to see. And Kang is right that cost has been being passed on to the consumer up to this point, but at some point, they're not going to be able to do that. So I think it's going to be very, very interesting to see how all of that unfolds. And I'm keeping an eye on GDP tomorrow, and then of course PCE on Friday, and more importantly, the Fed meeting next week. But real
Mhm.
quick, guys. So I know a lot of people are curious about these meta numbers. Q1 28.65 billion versus 27.67 billion. That is a beat. They see Q2 at 29.5 to 32 billion on a consensus of 29.48. So a beat and a guide up. Don't know what daily active users look like just yet, but decent beat for Meta.
Yeah, and I think the guide is the thing that you really have to look at, because it's like I think a lot of people had overall expectations as far as, hey, that we're going to guide down because the back half of the year is going to be, everybody's going to die again. It's like this is what everybody wants to tell you. The fact that it remains, it's like we are off the bottom nicely, and while everybody is still screaming for a pullback, what are you going to sell? Why would you sell Meta? Why would you sell Microsoft? What are you going to sell Google back under 100? It's like ultimately, what are we trying to do? Right? What are we trying to do and accomplish when these are the companies that literally are defining our future in so many ways, especially with the whole AI? It's like you have something, AI is the name game right now, no matter what it is. So I look, Ken, you made some really, really outstanding points over there as far as looking at these factors. You look at Coca-Cola. Once again, it's like they were sitting there raising prices because they're saying that they were running out of bubbles. We have no more bubbles, so we have to raise prices on our Coca-Cola. And this isn't a joke. The carbonation was a thing, so they were raising prices. The one thing I will say, Pringles are cheaper. I know this because we're allowed to have them in the house again. So Pringles prices are coming down, which tells me
Nice.
that we have a shot ultimately. You guys have anything else? Ken, you want to offer anything else up on this topic?
I just think let's see how the future plays out. You've got rising credit card balances. We're still holding up well in terms of the employment picture, but the consumer spend is 70% of our economy, and at some point these rising prices are not sustainable. So I'm not calling for a trapdoor, fall through the floor type event. If anything, it looks like we might get a small, shallow recession, but it doesn't look like the current path is sustainable.
Yeah, I'd like a couple of seconds on that. It's like if we can extend the clock just a little bit here. It's like when we're talking about this overall recession, we have to remember that this is absolutely Fed induced, 100%. It's
Of
like, and
course.
so as long as
Of
Big
course
Brother
it
is
is.
standing there, right? As long as Big Brother is standing there, waiting, like, okay, how much more pain can they take before we pause and cut? It's like because that's the real question. This is not authentic. It's not like there's some type of a thing going on. This is
But
Fed induced. They're
what I would
trying.
say is it was manufactured on the other side too by them keeping zero interest rate policies, zero interest rates for low for so long. So the people who are complaining about a recession that's on the horizon
Yeah,
I
well,
did not hear any of them
no,
complaining
no,
while interest rates were low for so
you're
long.
only, Ken, you're only giving half the story. It's like you can talk about rates in a lower rate environment, but that was the trend because if we go back pre-COVID, we were absolutely talking about deflation being the number one problem, and people having to have universal income. It's like so those concepts are. It's like you're not necessarily giving the whole picture, and I respect what you're saying because what you're saying is true. There's just other pieces to the puzzle that make this something that is a little bit more than
Well, of course there
free.
are. There's fiscal. We're talking about monetary policy, and
Yeah.
zero and universal income is a fiscal thing. That's on Congress. So we're not here to talk about Congress and politics and things like that. So of course I'm going to talk about
No,
one
we're
half
talking
of it,
about
which is the
deflation. No,
monetary side.
we're talking about deflation. We're not talking about the difference between fiscal and monetary policy. It's like they can only control rates. That's all they have, right? That's all they
I
have.
think
They're great.
you're mixing up a bunch of different things.
No,
So
no. Hang on a second.
let's get right on into the next one,
It's
folks. We
about
got
it's
Shag
true.
Mary Kill coming right on up because we need more time in this
Just
segment to our
But
right.
I
All
love
segment.
right.
both of you. I love you both. Okay,
Love ain't
let's go
got
on.
nothing to do with it, lady. Love's got
Share
nothing to do with
Wikipedia,
it.
brother.
Time for. Come on, Hellsbells. What's it time for? Shag,
Shag,
Mary, Kill.
Mary, Kill.
Go.
All right, name of the game. We keep on going through this for whatever reason. I don't know why. We keep on telling you what the game is. Shag, that is a scalp, up or down. Mary, you are in this thing, loving it till forever and ever and ever. Kill, you don't want to touch it, don't want to be a part of it, or you're going to try to murder it down to the ground. These are your options. This is the game. What do we have going on, Mario? What are you flipping?
We're gonna look back at UNH. We had a very, very nice play on this one, and I am patiently waiting for a little bit more of a pullback. Number one, I'd love to see this come back down a little bit closer to 470. If we could even get into that 460 range, I think that would be beautiful. In addition to that, if we could get some new flow to come in and confirm that we're ready to reverse, that would be even more beautiful. I think that there's a good range there to play in between that 470 to 500 ish area, give or take a couple points. So this is a shag for me, up and coming. I just need to see just a little bit more of a pullback and a little bit more flow. So it's on watch.
I
Be on
like the
watch for
idea
me.
in a defensive environment. Love it.
Yeah, would be on watch for me. Can't I like the defensive part that you guys are mentioning? I don't really haven't traded the healthcare names much, so I can't tell you how they move in relation to the market itself. But I was looking at it on the hourly when I saw that Maria had chosen this one. I like the setup on the hourly, and right now it's in a good spot in terms of support. But I would be waiting on this one to see which way it's going to break. Is it going to hold that area of support that it's on right now in the hourly, or are we going to fall through that? So I would be waiting to see which way this one goes with volume.
All right. So I guess it's my turn now. I'm still doing exactly what I was doing last week. It's like my overall position is just scalp intraday. It's like been able to get some good change that way. Especially when you have ER data and Fed all within a 2 week period. For me, it doesn't make sense to put money, like real money, to work as far as swinging out. So I'm sitting here chilling. I'm scalping intraday in the Roadhouse, where we've done very well over the past several sessions. Look to continue that. The only thing that I am still in Netflix puts out to June. I plan on sitting in that until they come to where I want it to come down to. So there you have it. Kang, what you got, bud?
Um, Same with me. I don't think that's wrong at all, man. I'm with you as far as scalping back and forth, especially when we try to find our footing here. So I like that. I was looking at Nvidia, and I don't necessarily have a trade on it right here. And I know we've talked about Nvidia before, but I do like the setup here. This is on the daily, so this is going to take longer to play out. I don't necessarily have a position on it right now. I think it's good, kind of going in line with what Hells is saying to apply this to Nvidia too. It's good to scalp here between support and resistance in this megaphone on the daily, but I have alerts set on either one of those lines to let me know whether or not we break up or down. And so I think it's going to be a really nice trade. So I wanted to use my part of the segment to just call attention there to that consolidation. And this would be a good idea for a longer term trade whenever she breaks.
Yeah, and there's still good range in there too. Like makes sense, just scalping those ranges, your little box thingy. We
Technical
could have fun
term, yeah.
inside your box, gang. It's like this is great. It's like it's setting up very nice.
That's a whole nother episode, Hells, and I'll have to respectfully decline that invitation. But a whole nother episode on that one.
That one's going to be a shag for me. I'd love to say shag long. I do have NVIDIA calls still. So, a long would be great. But with NVIDIA, it's always going to be, NVIDIA is always going to be NVIDIA. You got to be prepared to trade it either way, regardless of what longer term position you might hold. So stay on your toes. But if I had to pick, it would be a shag.
Yeah, look like it's like Nvidia is still one of those companies that I want to own and stay in and let it work to the upside. It's like we literally have microchips in everything. They put microchips in Q-tips. They put microchips in literally everything that you can possibly conceive of. Microchips are important to every last bit of the economy and to global development. into the world stage, from defense to, again, they put them in Q-tips. Nvidia is an upside play for me. I don't know if this is a level to scoop in, but that consolidation is very, very interesting. Thanks for the chart, King.
Hey, thank you, brother.
All right, Maria, what do we have with this viewer question? This viewer has a question. What do you think about that?
So the question is from Hero Silly, and the question is, what is the best way to play earnings with options? You don't. That would be my answer. You do not play earnings. You don't hold through earnings. You can play a run up to earnings. You can play a post ER move up or down, but we don't actually hold through the event. And I know that you guys have a bunch of stuff to add to that, so I'm not going to take all of them. Go for it.
I would just say, we always talk about the IV and how hard it is, like, going through a minefield when you're trying to trade ERs. It's like you've got to get, not only you got to get the direction right, but you've got so much IV that's going to be in there, and you really need this thing, whatever it is that you're going to trade, to move a lot. Like, you need it to move a lot, and it's literally like all these things are stacked against you. And I've heard Mario talk about, like Ivy Crush. And personally, that's not a drink that really tastes good. I've never really done well on trying to trade through ER. So I just don't mess with them. It's, to me, it's almost like gambling. So my advice would just be to, like Mario's saying, sit out, chill out, let whatever it is come out. And then, trade it afterwards when some of that IV has come out of those contracts. It's too tricky.
Yeah,
Not only that, sorry, Hellsbells, I don't mean to cut you off, but not only that, just to kind of piggyback off of Kang's, no, how many times have we had perfect numbers and the opposite happen, or perfect numbers, CEO gets on conference call says something stupid. You just never know. Sorry, Hells, go for it.
no, look,
Mhm.
it's like you guys both make great points, and I'll try to keep it brief. It's like I think it depends on what your vehicle is and how far out you're looking to play. Like if you're buying leaps, you can't sit there
Agreed.
and be worried about an ER. That's a part of the game. That's a part of what you're doing. If you buy enough time and you're far enough out, or you've been in for long enough going into earnings, you can risk off and take some of that off, right? You can put protection on the other side in order to protect your longer term position if you're in longer term options. If you're sitting there playing weekly YOLOs for ERs, you're a moron. I'm not going to say it any other way. You are about as dumb gets if you are playing weekly contracts during earnings. I can't say it anymore. You're dumb. You need to stop doing what you're doing. You need to quit trading altogether. You need to just say, I'm just no good at. You need to pick up cans. Walk around the street, pick up cans. You got a better chance of making money at the recycling center than you do playing weekly contracts on earnings. Ah, don't
Little
do
taken
it.
aback.
It is
Just don't.
crazy. It is crazy. Like, don't do it. Just don't do it. I mean,
Look,
and I always say it's very much like gambling. Like even Maria is saying, to piggyback off what she said. I mean, we've had great numbers, and it could sell off. It could be a sell the news event. And so it's just like, if you wouldn't, let it ride, like, you might let it ride at a crap stable, but don't do that. That shouldn't be part of your serious, trading strategy.
Yeah.
Just sit back and relax. Trade it the next day.
I'll give you a quick example. So everybody knows that I'm in that Netflix trade. I got in that Netflix trade probably a month before earnings. It never got up more than about 20% at any point in time. Even with the dip that it had off of that 335 level all the way down to that overnight low was, I think, is like what, 297, something like that, and then it bounced. I never got the action. So now I'm still in these. I'm down about 15% on the options, and it's a question. Okay, I I need Netflix to now pull down substantially, probably another 15 points, in order to really be able to capitalize on those options. I could have taken the 20% going into ER. I didn't. So now I'm 15% down, and I need some additional activity when I could have just taken the money in the first place. Look, just don't do it. There's just not a point.
And folks, really quickly, we love to hear what you guys have in terms of those questions. So please send us those questions. Check. You can either comment here or hit the QR code there at the bottom of your screen, and we can get that question that you might have into a future episode. But please send
Yeah,
those our way.
I agree. We just had here's a comment from Vasanith. Hopefully I'm saying your name right. We'll try to cover that next week. We'll all try to give our best bull and bear case scenarios moving forward based on where we're within the market. I think that's a great idea and great suggestion. Keep the ideas coming, guys. We're here to play with you. So fire away.
There we go, folks. So you hear the music, you know what that means. It's like at the Oscar, they're telling us to to close and wrap it up. But folks, very much enjoyed having y'all with us here. Please hit that like or subscribe button down there on YouTube so that you can be notified when we go live on future broadcasts. Look forward to seeing you guys next Wednesday at 4:10 p.m. Eastern. And for this episode, glad to have you guys, and stay green, everybody. Until next time.
Bye, guys.
Y'all have a good one.